Mark, good morning. So your thoughts on yesterday's session stateside and what that means as we head into the jobs report? Markets seemed a little bit nervous. Certainly something caused the sell-off. Was it Kashkari, the oil price, all of the above?
Yeah, it was terrible price action. Good morning, Anna. It was nothing to do with Kashkari. First of all, he's not even a voter this year. He's a known hawk. What he's saying makes complete sense. And ultimately, yields fell. So the idea that it was Kashkari that spooked the market is just nonsense. And also, if you just look at charts, you can see that stocks sold off before we even got the Kashkari headlines. So a little bit of due diligence shows this wasn't about Fed speak. In fact, the timing was around the oil price, what's happening in geopolitics, is the tension there. Oil prices started moving on the Netanyahu headlines. As we got the headlines, as we got the comments released from the Biden-Netanyahu comments, that's exactly when oil prices started spiking and equities started kind of selling off around the same time. Now, it doesn't help that we have that Fed confusion, but this is about higher oil prices. I have to say, the price action yesterday was absolutely terrible, and it's going into this really critical data today. I am very structurally bullish. I have been since December. I've read that constantly. I think that's the case. I am nervous for the next couple of weeks. I think we could see a temporary retrenchment, but I will emphasize, I think it's a retrenchment that will, before the bull market sustains again.
OK, and could that be driven by higher oil prices? We sit here with Brent at 91.
I think higher oil prices is part of it. But the other reason I'm nervous is I think the geopolitical situation is very tense. We're getting a sudden escalation going to a weekend. We've had an Iranian compound embassy essentially bombed, and then they've vowed revenge. That makes us nervous about what's happening in the Middle East. It's getting more direct between Israel and Iran. So that's the geopolitical backdrop. And I think for the first time in a long time, maybe a couple of years, non-farm payrolls is skewed to have a negative markets reaction, whereas the last couple of times it didn't really matter which way it surprised. It was likely to be a positive reaction. I think today in the short term, it is skewed for stocks to weaken. I don't think it'll be long-term weakness, but maybe for a couple of weeks.